Welcome to the Finance Podcast. The topic of this episode, Trends in Embedded Finance, with Julia Dutkowski from Yapeel.
Yes, so welcome everybody to my presentation about trends in embedded finance. The idea here is to really have an interactive exchange. So I will give an impulse of about 25 to 30 minutes, and then we have a good 10 to 15 minutes for discussion. So I look forward to your questions and to really a lively exchange. What will I be speaking about now in the next couple of months? First, I will briefly introduce myself and also Yapeel, and of course clarify what actually is embedded finance, because it's a buzzword that is around quite a lot, and the question first of all is, of course, what is it actually? Then I'll speak about 3 key trends that we see in embedded finance, and at the end we have time for the discussion. For the introduction, what is embedded finance? For this presentation, and also for us at Yapeel, embedded finance is the seamless incorporation of comprehensive financial capabilities in business models that are not typically financial in nature. And what is key about this to understand is that this allows to provide options for financing, for payments exactly where they are needed, so that the customer may have a seamless user experience. This is the end goal of such embedded finance projects. Now, how do we make this happen with Yapeel? Yapeel has been around for over 7 years now. We were founded in Zurich and are the first company that has the Swiss fintech license. We still have it today. We have now a couple further companies that also have the fintech license, but we're really proud to be the first member of this club. We're also a Visa principal member, and this combination allows us to provide really the whole financial ecosystem to our partners. So we can provide accounts, we can provide cards, and of course also payments, which connects all of these. Currently, we have over 1,000 business customers and over 25 embedded finance customers. And how does this work? How do we embed finance? Here, if we take a look, we can see at the very bottom, this is the secret sauce. This is our ledger, which is a real-time booking engine. And on this ledger, we can essentially layer any solution that we want to provide to our clients, starting with, as I already mentioned, accounts, cards, and payments, but also extending that to monitoring and reporting, so that our clients may have a comprehensive overview of what is actually going on with their clients. How do they transact? How do they behave? And of course, above all of this sits KYC, so that it is seamless for the user to onboard, and that the client may always know who are they interacting with, and do they actually want to have that business relationship. And all of this we connect to our clients, to our partners, via modern APIs. And why this is so important for us is that this is exactly the nexus where a business that is not a bank, for example, they can integrate via these APIs, and they can then offer our solutions branded in the client's branding, of course, to their partners, and to then, again, like I said in the definition, really deliver the solution that the end customer wants exactly at the right point. So now, how do we, as a technology provider, how do we enable these trends? Here, if we take a look at the key dimensions that we see and that will also shape these trends, we see here in this house, we see at the bottom, really as the foundation, the ecosystem. And what we see here today is that we have linear relationships between a bank and a customer. So typically, if the customer has a specific challenge or a specific need, they go to the bank and they discuss it bilaterally. With regard to products, typically what is then offered to a customer is also a very discrete product. So there is not the question what can holistically be offered to the customer, but really what is the one product they requested. And last but not least, typically for governance that provides the umbrella really here, there the compliance typically is rather manual focused and takes place ex post. And at Yapil, we now really take an active effort to move this into the future and to support this change that we see here on the right. So what does this mean? If we start again with the ecosystem, there we now have, instead of these linear relationships, we have a multi-layered ecosystem. Instead of discrete financial products, we have integrated goal-oriented outcomes. So the question is really what can be offered to the customer? What does the customer really need? What is the customer intent that we can provide input for, that we can provide solutions for, that we can provide advice for? And for the governance, the question is how can we in real time, and this is also again where Yapil's real-time engine comes in, how can we in real time enable that such compliance is observed and that really the highest standards of transactions and of regulation can be observed. So in a bit more detail, for the ecosystems, this multi-layered ecosystem, this means that platforms are growing quite strongly. The first use case there, which I will also be talking about a little bit more later on, this is agentic finance. This allows for a user to delegate their intent to an agent, for example, through a large language model, where then the agent can more or less autonomously then act and make, for example, a purchase. And this is exactly why it's so important to then have financial solutions integrated there, because otherwise the agent would maybe find some things to purchase online, but there would not be any possibility for the agent to actually make the purchase. Also, what we see and what is quite relevant is the so-called inversion of distribution from traditional banks to industry-specific software. What this means is essentially that we see typically clients, when they want to know what is their bank balance, they log into their bank account. When clients want to know how is their business performing, they log into their ERP account, etc., etc. So it's quite, like I said, quite linear. But with the advance here of these ecosystems, the idea is then that there is a one-stop shop within this ERP system, so that the user logs in once and they can have all this information shown to them. Regarding the products, there we see a convergence of solutions, which essentially means that, for example, a bank or an advisor is able to offer the customer really goal-oriented advice. on what should the customer do next, what would be a most fitting product for the customer. And last but not least, if we take a look at the governance, here the idea is to have what I've called here programmable trust, that we allow for transactions to be monitored in real time and hence ensure that a transaction that, for example, an agent is making, that this transaction is actually what the customer wanted. Now, for some examples to make this a little bit more tangible. If we take a look at the ecosystems, at the agentic finance, if we take a look today, what would a consumer journey be for purchasing, for example, an outfit for the Finanz 26? Today, one would research for inspiration, highly driven by recommendations, highly driven by advertisements, but typically one does not look through 20 or 30 different websites. Typically it's one or two. Then the offers, the comparison of offers is quite limited because there's really a strong login effect that we can see, because typically people just go to their go-to merchants. If you know Zalando, it typically works well. The likelihood that you check out five other options is limited. Then, while compiling the shopping cart, if the merchant does a good job of optimizing how their website works, the likelihood is very high that one also purchases additional things. And last but not least, for the completion of checkout, usually one uses a method that is quite convenient and that is known and that is also trusted. So what this essentially then means is that we have a direct interaction with the merchants, and we have payment methods that require trust in the merchants, so that the payment will actually go through, that the items will actually be shipped, and of course also trust in the individual payment methods, otherwise one wouldn't use it. So in the near future, this will then be an option to cover that fully by agentic commerce. And this will then really shift how do such transactions take place. Because there, of course, the research for inspiration, that will be taken over by an agent. At the very beginning, the user delegates the intent. They say, for example, I need an outfit that consists of shoes and a dress, and this should be in this and this size, etc., with a specific color, with a specific price. And then the LLMs then start looking for this. So they, of course, have a lot less of a lock-in effect, and they have a lot more capability to really do a broad comparison. And this means that then it's quite important for the merchants to be easily discoverable by such agents and to be easily usable by the agents. So there we see really a huge shift. Also, of course, the comparison of offers is quite different, because this is now a large-scale comparison of offers based on quite objectively defined parameters. Also, of course, the marketing, that is now completely different. If an agent wants to buy a pair of shoes and a dress, the agent will buy exactly the pair of shoes and the dress. But the marketing, it's nonetheless important, but the marketing then is, how is the merchant discoverable by the agent, and how can the agent move best through the website. And last but not least, for the checkout, there an agent can select the most efficient payment method. For example, if the idea is to have a cheap payment, then the agent can select that. If an agent would see, for example, it's a high-value transaction and therefore it would make a lot of sense to use a credit card for such a transaction because of the added security that is provided with such a transaction, then the agent could do that. And this will then, again, significantly shift how does the consumer even interact with all of these points where we had a touch point at every point before for the consumer. Now we only have it at the very beginning. Then it's up to the agent, which also, of course, again, means that the merchants really need to figure out how do they position themselves. And of course, also payment infrastructure providers need to understand really well how do they generate value within this ecosystem as to not be cut out. Then, when we speak about this middle layer that I just showed about the products that are offered, here we see sort of a high-level idea of what are discrete products that are offered today. And typically, if I want to have a mortgage, I talk to a very specific person within my bank, or I even speak to a specific provider. Similar if I want a loan. But the idea is that through really a convergence of data, the financial services providers can figure out what really is the customer intent and what is the most relevant financial product to now be offered to the customer, what should the best pricing for this be, etc. And this then really allows for these providers to move away from such siloed advice to really a holistic advice, to understand that the customer is truly in the focus here, and how can we meet all of these different customer needs. Also, here to make this possible, what is quite key is that the communication with the customer is quite efficient. So, of course, on the one hand, it needs to be highly personalized, which is a lot of work if that were done manually. So here it's key to integrate artificial intelligence. But on the other hand, it's not the answer to hand everything over to AI, but rather it's key to loop humans in wherever they can generate the most value. So for example, if there is an AI-based suggestion that a specific customer could now be quite interested in a mortgage, then it could be that the mortgage broker then picks up the phone and actually calls the customer. And then this, of course, reduces the workload of the broker quite a lot because they don't need to research the customer themselves, but they then can focus on really where their key value lies. So in the end, what is key here is to deliver advice and solutions when the customer really needs them. Now, last but not least, we go to the roof of the house I just showed, to the governance. Here we see several risks for governance, several challenges, but also several solutions. If we start with the regulatory challenges, there what is especially, for example, in agentic finance that I just spoke about, what is key is to ensure that compliance requirements regarding human intervention are observed. Right now, there's in PSD2 a requirement that the human is always in the loop. And this is then here the solution, and also I believe a huge opportunity for the entire ecosystem to develop such authentication protocols to ensure that the human intent is properly documented. That actually when you say you want to buy X, Y, Z, for example, that this is clearly delegated, and then if, for example, the agent hallucinates and buys not one pair of shoes but 500 pairs of shoes, that it's clear that this was not my intent, and hence I can, for example, refund. Also, this ties exactly into what I just said. The question is, who is really liable? What happens when the agent buys something and I did not want it? What happens if I want to order one pizza and I get 100 pizzas? Then who needs to actually pay for them? And there then, what is really important is in merchant contracts and also in scheme rules of payment providers to establish such algorithmic liability frameworks to really understand where did a mistake happen and then who is liable. And last but not least, regarding regulation, all of what I just talked about, it's on the one hand, it's really exciting because it means that I would receive, in the end, better and more targeted advice and offerings. But also, of course, for this to work, the data that is required is obviously quite broad. And this means that there's also a huge responsibility to ensure that this data is governed properly and that it's used in the way that is it is all right for the user, and that it's not leaked, for example. And here, then, it's really key to ensure such compliant processing of data and to also give the consumer a good option to view what data is stored where, and in the end be able to control where is data stored and where do they not want data to be stored. Regarding security, this is it's quite interesting, I believe, right now when transactions happen that are fraudulent. Traditional models are quite good at capturing that. For example, if my credit card is used at a very similar time in, for example, in Chile, in South Africa, and in Japan, highly likely that's fraud because I cannot be in 3 places at once. And the way that these fraud attempts happen, they take place, of course, in a short time, but there's a handful of fraud attempts typically with such with fraud engines, and fraud engines are trained to look for exactly these patterns. However, when we have such agentic commerce, then fraud can happen very differently. There can be thousands of attempts in a second. And this is something, it's entirely possible to implement such programmable payments and to implement such tokenizations to really limit this exposure. But it's important to capture this because otherwise the traditional fraud engines would not capture it. And also what is really key is this, what I call here the intent verification requirement, where it's key that the request that such an AI-powered agent has and based on which it works, that this intent is that this action is actually matched to the human intent. And how this works is through know your agent protocols, no longer know your customer. This also is key, but here really know your agents, and a seamless verification then of the user intent. And last but not least, for consumer protection, I've already touched upon it a little bit at different points. Of course, typically when I receive my credit card bill and I see this purchase, I did not make it, I can complete a chargeback, and if I stuck to all the rules, then I just get my money back. However, this means that I essentially sign a document that says I did not complete this transaction. But what if the AI agent, if I actually delegated something to the AI agent and they just made a mistake? And this is then key to, on the one hand, make this really establish the thresholds in such a way that it's always clear when does the human need to approve something. What are, for example, financial limits where it's always important that the human approves again. And also what is such a dispute resolution framework that people really trust in these payment methods and are excited to be using them rather than being afraid that something goes awry. Yes, so I believe I stuck to the 25 minutes quite well. And now happy to have a discussion. And I believe we also have a microphone in the room.
Yes, thank you. Can you hear me?
I move a little bit closer to you, then I can hear you.
1, 2, 1, 2. Yes.
Perfect.
I have a very simple question. You have presented at the beginning
Yeah.
a chart where you could embed basically everything. Do you really think that the large platforms such as Amazon would be so open to give you access that you could do your embedded finance play?
That's
all the elements you have mentioned are embedded in these large platforms. For instance, in e-commerce. What you're saying is basically that you could disrupt whatever they have built with some additional elements. Do you think that you have a chance to do so?
The question is, how do we think about these platforms, and how do we think about the offer that is provided? Because, for example, if you say you see, for example, a book in a magazine, and you want to be able to purchase in an e-magazine, and you want to be able to purchase this book with one click, rather than go to Amazon and look for the specific book. Then we can provide exactly this infrastructure to allow for this. And then that would also be, of course, for a platform like Amazon, a huge value add, because it essentially means that they can sell more. And this is, I believe, where this change can come in. Because in the end, there needs to be an economic reason for such a company to want to integrate.
Yes. May I add
absolutely
a little bit to this topic? Yeah. Amazon is a very world business, and they're not allowing bots for agentic communication. They have their own. But there are other huge businesses like Amazon. Shopify is a marketplace that is a great example of embedded finance. They earn over 70% of their revenues from providing financial services to their merchants, anything from payments to loans and so on. So it really depends. I have a question to you about, the transformation that Yapil is doing to prepare for agentic commerce. Are you doing it at the level of your core banking technology, or is it more above, like middleware and customer-facing capabilities?
There, it really depends on what our customers require and what their specific needs are. And then we assess it and we support them exactly there. So it's quite individualized by customer.
A beautiful good morning. One question regarding Know Your Agent, right?
Yeah.
Know Your AI. Do you currently see a jurisdiction where this is even possible to have an agent identified, paying taxes and everything?
I think these are two different points. The one point is about how are the agents set up, where do they pay taxes, etc. But this I would not subsume under Know Your Agent. There I would rather subsume how secure are the protocols that the agent is using, etc. And this is a service that can be provided, for example, by large card schemes. All right. If you have any further questions, feel free to find me, and I'm happy to have a chat.
Finally, the mandatory risk warning. The content of this episode is for general information only and is not a recommendation to buy or sell any financial products. All information is supplied without guarantee, and this is not an investment advisory. New episodes are released every Tuesday and Thursday.